Let me ask you something. What is it telling you when a stock delivers great earnings, strong guidance, checks every fundamental box, and still goes down? Because that's exactly what just happened with NVDA. Meanwhile, halfway around the world, the Japanese market handed us one of those rare, almost suspiciously clean technical setups. And a couple of tech giants that looked like they were falling apart are suddenly trying to crawl back above the line they just broke them. Before we get into it, if you enjoy this kind of breakdown where we talk about what the market is actually doing and not what CNBC hopes it's doing, hit subscribe and share this with someone who still thinks earnings drive price. Welcome back to Chart After Dark. I'm Guhan Ilgazli. Tonight's theme is simple. When the story says one thing and price says another. Let's start with NVIDIA, folks. All right, so NVIDIA did what everyone expected it to do. Strong earnings, solid guidance, AI narrative intact. On paper, this should have been a launch pad, and technically, it even looked like one. Price broke above the horizontal channel, the one that had been capping it for a while. And now normally that's exactly what bulls want to see, a clean breakout backed by good fundamentals. That's a dream combo, except it didn't stick. Instead of accelerating, price reversed, and this is where things get interesting. Because when breakouts fail, especially after positive news, it's not just a technical event, it's behavioral. It means the market had every reason to go higher and chose not to, which actually tells you that someone bigger than retail was using that strength to sell into. Markets don't punish bad news, they punish crowded expectations. And this was a classic case of should go up moment that didn't. Now we're back inside the range, which turns what looked like expansion into something that might start to resemble distribution. Okay, now let's look at the Nikkei JPN225, because this one almost felt unfair. Price rallied straight into the top of a beautiful defined rise and parallel channel that you see here. And I don't mean close to it, I mean right into the upper boundary. That's the kind of level where momentum tends to run out of steam. So when price tapped that line, it gave a really clean short-term short opportunity, and I took it. And the rejection came quickly, honestly. This is why I always say markets are less emotional than we think they're geometric. And when structures that's clean, reactions are often just as clean. Okay. CRM, let's talk about that one. Salesforce. Salesforce had looked pretty ugly, I'm not going to lie. It broke below a major support level, the kind of level that, once gone usually signals continuation lower. But instead of falling apart, it climbed back above today. Well, that's important because breakdowns that fail tend to trap sellers. And trap sellers eventually become buyers, so what started as weakness is now trying to morph into stabilization. Not strength yet, but definitely not the collapse it looked like. Finally, let's look at Netflix. Netflix is telling a similar story. The support broke, trend rolled over, momentum faded, then suddenly price clawed its way back above the prior support zone. And again, that changes things because reclaims shift the psychology. They say maybe this wasn't a breakdown, maybe it was a shakeout, and markets love shakeouts, especially when they flush out late sellers. All right, let's look at the big picture. So let's step back for a moment. We've got NVIDIA showing us that strong earnings don't guarantee strong price. Okay. The Nikkei respected structure almost perfectly. It was beautiful. CRM and Netflix reminded us that breakdowns don't always stick. And this isn't a market moving in one direction, clearly. It's a market testing conviction. And that's where the opportunity usually lives, folks. I'm Guhan Ilgazli, and this is Chart After Dark.